Forbes India Influencers of Change in partnership with UiPath.
The very face of banking in India has changed in the past 2 years during the pandemic. Customer journeys have taken exciting new directions. Branchless banking is almost the norm for daily engagement. KYC is being done extensively via digital channels. Processing of insurance claims or loan applications has exponentially scaled up using automation. AI-powered wealth management tools are providing more sophisticated inputs to users, while analytics are helping to prevent fraud. And of course, new products such as buy now, pay later have emerged. Now, the force driving many of these changes, catalyzed by a surge in digital interactions, appears to be smart automation, which has evolved from just below the line discussions around infrastructure, security, and stability to actual and critical decisions on products, revenue streams, and scalability. Realizing the benefits around productivity, efficiency, safety, and convenience, however, requires substantial groundwork to change the status quo. Today, you will get to hear the change journeys of some key players in India's banking sector, along with broader expertise on trends shaping automation in the financial sector around the world, on this special presentation titled Forbes India Influencers of Change in partnership with UiPath. I'm your host, Gautam Srinivasan, and joining me on the panel are Subrat Mahanti, who's the Group Executive for Banking Operations and Transformation at Axis Bank; Shripad Jadhav, President and Business Head for Tractor Finance, Crop Finance, and Gold Loans Leadership Team member at Kotak Mahindra. And for their expertise and leadership in the field of automation, we are joined by UiPath's Scott Hunter, VP for Customer Strategy and Solutions, and Anil Bhasin, MD and VP for India and South Asia at UiPath. Gentlemen, thank you very much for joining us for this second episode of Influencers of Change. Now, these days in the newspapers, you get to see headlines around using technology to power growth and expansion for banks. Yesterday, in fact, I read about lenders trying to tying up with fintechs to tap new customers, save on costs, and ramp up their retail network. Now, the same article stated that in August, Kotak Mahindra Bank deployed a do-it-yourself platform for missed loan repayments in a tie-up with fintech. I guess what I'm trying to say is that's actually tradition at Kotak, isn't it, Shripad? Kotak Mahindra Bank had championed a digital-first strategy well before the pandemic, and we can see the after effects of that. It leaves bandwidth open to do different things. It leaves you open to do different things. Take us through how that foresight helped the bank quickly respond with digital solutions such as video KYC or e-sign or digi home loans. More importantly, how are these systems geared to handle a surge in customer queries while maintaining effective business continuity using the power of automation?
Hi. As you rightly said, we started on the digital journey long back. I think 811 is our flagship product, which we started post demonetization. And I think digital is a culture. So unless and until you have a success story, there is a large level, organizational level adoption is a key. So 811 has also seen the market. We were very aggressive and we were able to capture the market in a very short span of time. And that was a focused team which was working, and we get into the video KYC. Unfortunately, the whole world got COVID as a surprise, and everything was locked down. Practically all shops, banks were closed, though banks were allowed to operate with the skeleton network. But as far as the loan processing goes, or as far as onboarding new customer goes, government was not allowing anybody to travel. In past world, every point of time our RM knocks your door or RM meets you somewhere and he onboard the customer. I think that was a past. And because the various systems in the banks like KYC, and thanks to I must say that the smartphone penetration in India before pandemic was a boon for us to enter and rework on our processes. Financial inclusion per se plus Jandan accounts. So every sort of customer, the area which I look at it is a Bharat side, which is a non-semi-urban and a rural market. Customers were knowing how to operate mobile. Customers were knowing how to do chat. Customers were knowing how to click pictures and transfer that picture. I think all these processes are very essential when you look at any process, because your customer need to be, having some basic knowledge. And post that, when we have a learnings of 811, when we started on a digital account opening 100%, and a video KYC which was adding to it. So all these cases was debottlenecking the customer onboarding journey for us. So this has helped us, and it also gives us a lot of learnings on past, what customer wants, what a particular segment wants. At the same time, we were also having an approach of digital. So it's not 100% digital. There is some digital touch which is required, but where you will put your resources, where your RM will help him, how you can handle the digital journey with the customer, how you help him, what are the key points, including the point is, when you take a video KYC, a simple example, what are the document which you should have when you sit in front of a camera and start your video KYC. I think that is very important. So these are the learnings which you adapt when you do your processes, and when you adapt this as an organization, and when you have a culture of passing on this information across the organization. For example, the home loan. I think why we went for a home loan first. It's an urban customer, slightly better customer, because our forte is more on our urban side. So once it is lending, all the mortgages can carry the information which you are learning. All the mortgages can have a use cases. You can correct the processes, and then you can build it in the various part of the bank. I
And
think
the
that's
automation aspect helped you learn that? Did you integrate a lot of automation in that?
exactly. So the point is, we as a new age, because we are here for 30 years only. So the point is, we have learned that automation, and across the system, when customer fits any information, how you reduce the clicks on your digital program. I think that was our main adoption. How you use various automation techniques, like integration with Aadhaar, or integration with PAN or NSDL, anything, or using the Perfios, Raiko startups or fintechs to use your data automatically, which will help. Some we have in use cases where tie-ups which we have done. So customer databases were used, some partner fintechs were used for onboarding your journey. At the same time, including the on the housing side, our valuation process was also a digital, which some of the databases where some startups are doing in a various pockets. So we were having a multiple startups, because you don't have expert everywhere. India is a vast country, and you need to have a regional expertise, and regional processes are also different, which are regulated by the government. So all these things have helped us in doing the effective automation, I will say, not only automation, because automation is not, you need to have a multiple channels of automation, so that multiple customers you will onboard based on his need, based on his understanding, based on his profile, and what is his readiness for giving you the documents, type of document which you have, and the network speed which is available at particular place.
All right. Let
Exactly.
me bring in another digital champion into the mix. Subrat, Axis has also scaled up substantially on the back of its digital transformation efforts. I read that the first half of this year, more than 70% of Axis deposits were opened digitally, around 58% of personal loans were done digitally, and 48% of mutual fund sales also happened digitally. So take us through how discussions around automation evolved from an idea to a key part of the product or the product itself for Access.
Uh, right, Gautam. The numbers that you mentioned, we possibly are now about maybe another 10% above those numbers as we speak. See, there are really, three pillars of our digital strategy. The first one is our focus on reimagining the customer journey. Just not take a product-centric view, but take a view from the customer and go back and work out what kind of journeys would work for a new age mobile enabled customer, a digital enabled customer. And these reimagination, I mean, we use different techniques. We use design thinking. We have UI UX experts. Just the idea of how should we start from the customer and work backwards, rather than take a very product-centric view, which was how the traditional view of setting up a particular product and then pushing it through the distribution channel. I think that's one, in some sense, inversion of how things work. And our core idea there is, the future product manager. In fact, I would say even the current product manager is no longer within the bank. It is the customer. So what you need to do is you need to give them configurable parts of the product, of the service, of the journey, and let the customer configure the product for herself. And that's really how the reimagination has worked. And that's part one of the story. And this is, I could go on and on about this, but so how you think of the product, therefore, how you think of the service, how do you put the product together in terms of configurable parts? There is a whole architecture underlying this, which requires a lot of understanding of, digital tools, understanding of customer, understanding of automation, and bringing all of them together to, stitch together this particular proposition. So that's one part of it. That's one pillar. The second pillar for us is, in some sense, modernizing the core. It's all very good to do the front end, which is very slick, which is extremely seamless and frictionless. But, eventually, these transactions are very high in volumes because, just because, say, for instance, UPI coming in, the number of transactions are in tens of millions every day, which are very different from what they used to be in the past. So both the volume and the velocity of the transaction goes up quite dramatically. And therefore, your core systems have to be modernized. Now, they either need to be replatformed, upgraded, or as we are seeing in many cases, we are hollowing out the core. And that's again very important because the core then is in sync with the speed, agility, and the volumes and the scale that your front end is aspiring for through this very reimagined customer journeys, reimagined customer products. So that's the second pillar. And the third is continuing to build future-ready capabilities within the bank. And this does not just include technology teams' capabilities. One of the interesting things that I'll tell you, for the last 14 weeks, the top 30 leaders of the bank have gone through what we are calling a technology masterclass. Every Friday for 2 hours, for 14 consecutive weeks, people have gone through technology masterclass, and the last 4 classes were programming classes. Every single one of the 30 leaders actually had to sit down and program an app for themselves. So while we are building capabilities within the technology team, it is about building digital capabilities in our analytics team, in our operations team, making the front end, which actually meets the customer. Like Sripad mentioned, you need to know what kind of, documents does the customer need to be ready with. You need to understand how does this flow work for you to be able to guide the customer through it. So that's really how things have worked for the kind of numbers that you just mentioned, where in excess of 65 to 70% of pretty much every product now is digitally sourced and digitally serviced.
All right. So would you say that for the 3 pillars that you mentioned, making customer the product manager, modernizing the core, and becoming future ready, would you see automation as the base of that, helping you realize each of those objectives?
See, automation has to be the foundational element, one among them, right? Because if you just take the simple goal of paperless, contactless, and zero duplication of data entry through your ecosystem, just take those 3 simple goals. You will automatically hit some of these outcomes that we are talking about. And we have taken that, in a simple way to communicate it to our operations team, to our sales team. It's just, let's try and make the journey paperless, contactless, and let's never duplicate data entry. Once the data has entered into our system, it should flow. Data should be fluid. And, if you keep this as simple as that, you will realize you have to do automation, you will realize you have to go to cloud, and so on and so forth. So for us, those 3 are the foundational elements, and therefore automation follows from it.
All right. Well, we've heard the banking leaders. Let's get in the transformation experts for their response. Scott, over the past 25 years, you've helped many customers realize more value from their digital transformation journeys. Tell Tell us about some interesting ways in which you have seen banking clients evolve using the power of technology and automation.
Well, I think it's a good topic. Typically, when I talk to bank executives, they want to know, how do I do automation at scale? How do I actually optimize what I'm going to get out of my investment? So we typically go back and we talk about an AOM model, which is an automation operating model. And I look at the automation strategy. So I first start off to talk with an executive about vision. Where do you want to go? Where do you have to go? So I love the idea about reimagine the journey for the customers. They know exactly where they need to go. They have to understand, how am I going to get there and when do I have to get there? So in today's age, you have to do it very quickly and you have to understand exactly where you're going to. And then from there, you start to understand what the use cases are. And so typically, customers want to know, Scott, tell me what other customers have done. What have other banks done? And so this is where I go back and explain about great customer success stories like Wells Fargo. They've saved about $45 million over the last 3 years. They have a target to hit $75 million. And people want to know, or other bankers want to know, how did they do it? What did they go after? What did they do first? What are the use cases? So we want to be able to actually articulate those use cases and explain, how did we measure the value? And then how do we have a governance to put it into effect? And so this is why I always go back to executives and say, can we talk through the automation operating model so we know what the governance process is, so we understand what use cases go into the mix, and we actually look at each use case and estimate what the potential value is, because I want to actually automate what brings value to the bank. And so I typically also go through an exercise to understand the 4 different types of value. And we have a total cost of ownership, which the CIO is very interested in. I have a tangible set of value, which the CEO, about what I'm going to grow, is specifically interested in. I have intangible value. It has to do with governance, risk, and compliance, which is typically a CFO conversation. And then I have strategic kind of value that has to do with M&A type work. And so we want to be able to actually have that rich conversation with the sponsor, and the sponsor becomes super critical in regards to being able to drive the vision across a bank or across an organization as we move forward. And then finally, I want to understand, what are you trying to measure? And then make sure that those measurements are put into a scorecard so we can actually go back and actually have an ongoing type of conversation with the bank and with the center of excellence. And then finally, I start to see customers want to know speed-wise, what have companies done? And I think one of my best examples of speed is Bank of America. They've actually implemented about a year ago. They've realized $50 million worth of value already. They've freed up about 1 million man hours so far, and they have a target of 8,000 robots. So many customers get stalled out about maybe 100 robots, and they can't go any further. It all relates back to this AOM model that we've kind of talked about. What's the infrastructure, and how do we actually set the strategy, set the governance, set the compliance so that we can drive it forward at scale? So that's kind of what I talk about and to drive it, but it takes executive leadership, and that's why I'm so excited to be on this call, where we see great examples of executive leadership driving this change across an organization.
Absolutely. And it's the value that the C-suite sees. And as you say, the automation operating model, it's demonstrated value for both Wells Fargo and Bank of America. Let's see what happens in India, some success stories coming out of India, especially for UiPath. Anil, last time we spoke, you mentioned that conversations around automation have gone from being a tactical necessity at a technology layer to a business outcome driven approach. So could you share with us some success stories from your India customer base that showcases this evolution? Scott mentioned some global examples. We're looking forward to some India examples from you.
Yeah, thanks, Gautam. Great question. So first, I think when we spoke last, and this is just the experience that I've had, there are 2 types of approaches that we've seen banks take, and I'm not going to name them, but one is really a bottoms-up tactical approach, where it starts with one particular function. You kind of look into 3 or 4 processes. Everybody wants to know the results, and then it starts percolating down to other functions, right? Eventually, there's critical time that gets lost, and obviously, in my view, automation is a business differentiator. It is a boardroom conversation. The other approach is where we've seen a top-down strategic approach in customers in India. I'm talking of banks again in India. And this is one of the leading private banks where they actually have a vision document where they say, what do we want to achieve in automation by the year 2025? And this is one of the largest private banks I'm talking about. So it really starts with having a very strong executive vision that Scott was talking about around automation. And they're very clear. They don't want a piecemeal conversation with multiple providers. They want to consolidate. They want to look at a provider who has a roadmap, who understands automation and is married to business outcomes. This is not about trying to just sell some technology or products. This is really about achieving business outcomes, which is commonly discussed and agreed upon. The second is, once they have got this vision clearly, they kind of pick out where are the low hanging fruits in terms of, the automations by functional area, and they pick up 4 or 5 functions, which are, very, very important, where they kind of measure the outcomes. This is obviously, with a plan and a budget for resources. They form a, center of excellence. They empower people, which is, to take a look at not just use cases that we bring to the table, but crowdsourcing of ideas within. And then it starts like a complete wagon wheel, which is, in motion. It increases, velocity comes into play with more ideas. And I can tell you, we are already seeing many banks now go with a top-down approach because the bottoms-up didn't work. We are seeing consolidation of players where they want to marry somebody who has a very strong automation bent of mind and has proven their credentials. I'll give you one simple example, and this became, a very critical, at least a learning curve for all of us. This was a private bank where they said, automation, if you look at automation, there are 2 or 3 different categories you can look at. We are more interested in bespoke solutions from automation. This is about email classification. In COVID, there were millions of mails that started coming. And this bank said, we're wasting a lot of manual hours trying to figure out the categories or the categorization of these mails. And then, you have to give a response. This ties back to customer experience. So they said, can automation give us a view, which is classify these mails into problem areas, and then let's start sorting them out and building a response, an auto response, right? And it went viral. They saw 95% accuracy in terms of categorization of emails, making sure that there was a response and customers' complaints were being attended to. And they've now shifted it from 1 to 5 different functions, right? So this is again getting, I'm talking about not just one, we're talking about 3 other banks who kind of like this use case. So success stories is really learning about automation from one another, but at the same time, like Scott said, where have you proved this? Show me that you've achieved, the business outcomes. I'm more than happy to kind of start this journey with you on.
I guess to compress it, you could say, show me the money. And especially for the banking sector, that's going to be key. But it's an interesting thought that you have seeded right now, the example that you gave, which is about how banks are managing their relationships with customers in this digital age. So let me get in Subrat and Shriprath for their views, on this relationship management. So, for example, one banker I spoke to earlier, he said that they look at leveraging digital for customers by going back to the drawing board sometimes and seeing what can go wrong from a customer's perspective. So what's your bank's approach when it comes to developing and maintaining customer journeys using the power of technology and automation? We'll start with Subrat first. Subrat, as you said, one of the key pillars that you have is making the customer the product manager. So in that sense, what's the approach?
So Gautam, let me start by first saying, the customer in India is just not a sort of a single demographic entity. India, like they famously say, lives in 19th, 20th and 21st century simultaneously. So one of the first things that I think we all need to bear in mind is anything that you do, it has to be an omni-channel strategy. Digital only is one way to go. And then there is a digital enabled, approach to managing customer relationship, which means you'll need to make sure that even if the customer is coming through one among the other, channels, whether it's a physical channel, whether it's a phone banking channel, you are still able to service them and yet give them the advantage of the smoothness, the frictionless process that a digital channel affords you to do. So that's one point that I would like to make sure that all of us bear in mind. On the other point that you said, see, for us, a very important part of making sure that we are able to look at a customer as a segment of one is what constitutes our big data lake strategy. So what we've done is we've created a service data lake. I mean, we have a big data lake, but within that we have a service data lake, which ensures that every single customer interaction, not just of ours, but also of our partners, our vendor partners, the folks that are out on the street meeting the customers, all of that information comes in to this large service data lake. And that gives us, I would say, more than just a 360-degree view of the customer. Because what it allows us to then do with that kind of information is it allows us to test almost on an everyday basis multiple hypotheses using the typical A/B testing approach of what might work for a particular customer segment. And therefore, can we bring down our servicing approach to micro segments rather than broad segments of affluent, super rich, NRI, which are the classic ways of looking at customers in a very broad brush strokes. What we have been trying to do in the last, couple of years, and more so in the last, 2 to 3 quarters, is just try and build the segment of one. I mean, we are not there, but it's just continuing to make more and more micro segments for our customers so that the servicing that we are doing, the ability for us to find what might be the next, need of the customer, how would they like to approach us in terms of a request, we are able to anticipate and not be reactive. And that's again very important, because once you've got this, you are able to figure out where the customer might go next in terms of the most preferred action from here on. So that's one very important part, and we are sort of supplementing this with what we are calling a nudge strategy, which is we're creating this nudge engine, this platform that is able to make sure that at every stage there is a nudge, a small little, from our side, an action or a suggestion of an action to the customer, which might actually benefit the customer. So I'll give you an example. We know that this customer took a checkbook, and the checkbook was taken about a year back. It had 50 leaves, and we now know, based on the service data lake, you are at about 42 checks now, and that's another 1 month of check leaves for you. Start sending a gentle nudge that in another 45 days your check leaves will be over. Do you want us to send you a checkbook? And so just don't wait for the customer and then have problems of checkbook getting lost in transit, etc., etc. Just start 45 days in advance, and the customer says yes, of course. And you just reduce customer load when it comes to them dealing with the bank, and that's really how we are looking at it. I mean, again, another thing that I could talk on for hours, but that's just one of those ways of creating this service data lake and just finding use cases, doing A/B testing, eventually trying to reach the segment of one from
All right. I think that's a great approach that you mentioned, reducing the friction in the experience between the customer and the bank. And as you say, you are proactively anticipating your customers' needs and nudging them towards certain actions which benefits them. That's a great point that you mentioned, Subrat. Let me come to Shripat. Shripat, how does the Kotak Mahindra approach work when it comes to developing and maintaining customer journeys using the power of technology and automation, especially since your division is more now tier 2, tier 3 areas, and more going towards more rural areas, catering to their banking and financial needs. So how does your approach differ?
I think Subrat has covered majority of the points which we have, especially in the Indian banking sector, because which is giving a better experience to the customer. Every customer needs are different. Okay. One more point which we wanted to add is we wanted to add many of the journey on a DIY side, because you really don't know when your customer wants to do it, whether he wants to do it at night 12 o'clock or morning 10 o'clock, you don't know. somewhere I think the way we are using on technology on smartphones now, we are, the customer is becoming impatient. Okay, so he wants things just now, and he want to start the interaction whenever it hits him. He has to start the interaction. So our approach is, at point of time, we need to have all the systems. One, definitely automation need to be there. You need to envisage the journey, but there has to be a strong feedback mechanism. There has to be a from, we are using a net promoter score as for every divisions, every transaction which we do, and we ask the customer. Definitely few customers respond to it, few customer doesn't respond to it, but whoever responds, and especially the guys who says no, I'm not happy, this is not something right which you have done, then deep dive there, and he is a good trainer for you. Actually, he is a person who tests your product, he tests your use cases, and he comes back and tell you, hey, this is not required, why I should have had it, I have given it to you some time back. Actually, that's a investment which one has to do, when, because it's a journey. What you develop yesterday may not be, useful today. There are something which you cannot have a, if you have on your website, on your app, if you have 25 pins which are there, which you will operate, the guy will get frustrated, your look has to be changed. He's saying that, hey, I want only 5 point, I want only profile based mobile banking. You running all the 25 30 use cases there, it's a problem. So the point is, I think it's a continuous learning. As Mr. Sprugrod rightly said, actually we need to go back to the drawing board. We need to look at it. If he's buying one product, whether he wants to, he's missing something here, and that nudge engine is very very important. I think on the backbone of it, it's a culture which you are creating, because your employee feedback, your regional relationship manager feedback, and your customer feedback, you need to have a laundry list with you which you will satisfy over the period. There are many things which will be still there, you are not satisfying, but it should be there on your drawing board, saying that, oh yeah, these are the 5 things which I have not satisfied, but I need to find a way. Because every technology, and second point is what Anil was saying is absolutely, I think it's a good culture which is getting created in Indian banking. Many of the use cases, people are adapting like what the other banks has done. It's not an invention of wheel again. Okay, and overall the banking system is getting, at the same time, if you really look at UPI experience, I think the amount of load the UPI handles and the accuracy of the data, plus Aadhaar as a unique number and integration which is being done on that system, and government database which are getting integrated, I must say that I think government has also done a lot of efforts, especially on the digitization of revenue records, the GST data. These are the many things which are helping for a quicker decision making, and it is actually creating experiences in the financial sector, because in financial sector, transaction size, there is a vast variety. You are doing millions of dollars versus that 5 rupees transaction is also important, and all the things are happening at a standard time with the standard SLAs. Plus, I think the regulator is working in a banking sector where regulator is putting, see, today you might have heard that if your ATM is non-operational, then you will get a fine. So there is a regulator who is making you more disciplined. There is a regulator who is telling you what to do. There is a government who is creating an ecosystem, and there is a customer who is coming up and he is using a smartphone and a video. I think the video, the way people are adapting videos, your job is very simple to explain your product. 10 video going viral on the net, many people has to just apply a button, apply now. Earlier,
It makes it frictionless.
Exactly. Earlier, you had so many. So your communication is going directly from you to the customer, and there is no intermediary communication happening. Earlier, there used to be agent on the financial sector. There used to be aggregator on this. I think directly to the customer. And I think in India, one more point which we wanted to add it, we wanted to create a vernacular journeys. Okay, because India, the language changes every 30 kilometers. And when you travel 300 kilometers, what you talk 0 mile is he's not able to understand. So it's at a mass, especially on the rural and semi-urban market. We are using technology to give a vernacular experience. We are using a voice recognition techniques to understand what customer wants.
All right, those are some great examples of how Kotak Mahindra and Axis have reduced friction between themselves and their customers. Let me get in Scott and Anil for their views on this. Scott, considering, when we talk about when scaling up automation, we are also now talking about scaling up customer experience, and chatbots and virtual assistants are becoming sort of the new digital storefronts, which are helping companies overcome the app barrier when it comes to customer engagement. But from experience, some companies do it right and some not. So in terms of scaling up customer experience, what should companies do to balance engagement in an organic way that does not appear artificial or pushy?
Well, I think it's a good topic, and I think we've touched on it already, but it's got to be frictionless. The customers want to have a frictionless type of interaction. The other thing we talked about is now. How do I do cycle time compression in order to give the customer what they want now? And it's not only when they do it on the phone, on a mobile device, but if they call into a call center. And you can start to see where a call center operator might have to open up 15 different screens across 10 different legacy systems in order to get the customer's name, plug it in, close a screen, continue through that whole process. And before they get to the end of it, maybe 4 or 5 minutes later, they're actually getting to the issue that the customer wants to talk about. If it's automated with AI, ML applications on the bots where it helps the customer or the call center agent work quicker, they could be done in a matter of a few seconds. It takes all the errors out of the system because it's pre-populated across the different legacy systems. And the customers get this kind of satisfaction that it's done very quickly. Their time is important. It actually compresses the cycle time. And I find that this is something where we look at the customer journey as we disaggregate it. They want to have it frictionless. They want to have it now. And you always have to put the customer first. Look what they want and try to drive and deliver to what the customer wants.
All right, Anil, when do we see an entirely, AI-driven virtual assistant contact center run by banks to improve operational efficiency and customer experiences? It is important to understand also how it benefits, right from creating brand awareness to buying products and services and evaluations about the quality of service. When do we see these exciting things happening?
In fact, Gautam, they're happening now. I think there are multiple nuances to the question, so I'll try and address. Basically, there are 4 trending automation areas. If you just cover the topics that you mentioned, one is you mentioned digital assistant. This is being very aggressively used to unlocking human productivity potential. What do I mean by that? Is like if you take and this is, I'm talking about US EMEA banks already are doing this. They provide digital assistants to their AML analysts, to their internal auditors, to their finance teams, right? Because you want to kind of get into, like I said, unlocking the complete productivity potential. And many banks are now doing this across all employees, right? And I'm talking of the banks in the Western world right now. The second is the digitization of these lending journeys, right? I'll just take a minute on that, where we are talking about unattended bots, looking at document understanding. This is really about trying to reduce time to close for mortgage loans, right? So that's another use case where people are looking at AI ML. Third is loss mitigation and default management. That's another area where AI-based default prediction. I mean, you look at the customer's behavior. You look at because of COVID, opportunities to kind of provide loan restructuring. So it is really about looking at a prediction-based model, leveraging AI ML. And there are many banks in India that I'm talking about right now where they are really looking at using it as a big lever to kind of, take down their losses or provide a complete loss mitigation strategy. Last, you talked about customer servicing, right? And I think Subrat mentioned this rightly. This is really about omni-channel experience, right? Whether it is email, contact center, IVRs, branch. So people are looking at providing AI-based email servicing, right? Using, again, unattended bots. And I gave you the example of the email classification use case that's a classic use case of how do you deliver better customer experience, enhancing better employee engagement, better productivity internally as well. All of this is in play. It goes back to the earlier point, Gautam, which is what is the automation strategy for a bank? What is the vision? Where are we taking this in the next 1 year, 2 years, 3 years? What business outcomes do we want to achieve, right? What is the milestone at which point that yes, you're getting the benefits of automation? Because for me, it's an irreversible trend. Automation today, and this is just my view, you cannot have digital transformation without automation, which is really embedded in AI ML. The basic rudimentary, RPA conversation is over. That got over almost 5-6 years back. So this is really about looking at customer experiences. This is really about engagement, employee engagement, looking at taking automation from back office, which was the good old days, HR, finance, legal, taking it to mid office, then front office. That's why a complete automation strategy is key, in my view.
Absolutely. And it's been fascinating to see the evolution of automation from back office to the front office and to become one of the foundational elements of any bank. And as Subrat said, whether it's making the customer the product manager, whether it's becoming future ready, automation plays a part in everything, even in modernizing the core. In fact, it helps there. But as we head to the last leg of the discussion, let's also talk about the raw material fueling customer journeys, which is data, especially the quality of data from a legacy and volume perspective. As employees from, say, banks and financial institutions, they deal with a huge amount of data from customers, which involves manual processes which are prone to errors. And Shripad would agree with me on this. So I'll get his view on how automation can be leveraged to decrease costs for companies by preventing errors in real time, especially as you head into tier 2, tier 3 areas. I'll get a view from Shripad and then a response from Scott. Shripad?
I think you're absolutely right. First time right is a mantra for this, and multiple data entry. Actually, it's a problem today. Okay, so what we are trying to do, which Subrat also mentioned, once the data is entered, or suppose you are using a NSDL APIs in the system, and you are capturing that data, there is error-free data. Whatever is there on your number, what OTP is used, your data is penetrated. And if you are using the same data, your errors reduces. Same time, wherever your documentation in India, because today we are talking of digital, but our judiciary has not changed much. There are still many documents which are physical signatures are required. So how to do a digital signature done? The simple KYC. Now, in the KYC document, you used to have a 4 or 5 document. Today, with the Aadhaar, you are doing a seamless. So you are reducing the inputs, and hence you are reducing your error percentage, and that gives a better experience, and that's results in the less error. Still, there are some areas where you have to go with the physical document. You have to take a scan-based database, which is a journey, I think, which also over the period in Indian side, it will improve. So the question is, how you do a standard databases, how your system is agile to get access to various database systems. I think that's the key in the error reduction if you are going with the automation. And third is your parameters, especially I think banks, we are forgetting the credit or lending is a major part of the bank. Okay. So how you assess a customer, how you look at your various database. So you don't have a standard assessment process for every customer. As you are going a micro segments, your assessment can be more focused, and that's the approach which we are using. So ultimately, in a nutshell, as a philosophy, I can go on the cases, but ultimately, what is the bare minimum information which you need? How you process that information? What standardization you will develop in this, and how your systems are agile, or they can be changed overnight. I think that's the whole approach, that's a culture which we are trying to do. And you need to be bold enough to scrap some of the system which you have developed recently also.
All right. It's a fair point that he mentions, and I'll get in Scott for his view on how do banks maintain the quality of data to ensure success for the automation operating model that we talk about. Scott, your view on this?
Well, I think we've hit several of the topics already, but the more we can have the bots actually move the data so that there's no error. A bot doesn't have attitude. A bot doesn't get tired. It actually copies and puts it into the next system without an error. It's the same thing with other types of interfaces. So I do think as we streamline the process, as we start to continue to use these bots, they will help keep the data so you only have one source of truth. I do also think that we hit a point about document understanding. So UiPath has invested a tremendous amount of money into understanding the documents. So it's about scanning the documents, understanding where specific fields are on documents so we can actually extract the data and reduce the errors from a manual kind of intervention when someone looks at a document and has to rekey the data in. So anytime we can take the operator out of the process of entering data, that's a good deal. That's a good thing to do. And then I think there's other places that we can actually help about doing data cleanup or understanding about the data. It's like compliance reporting. Typically, that's a very manual process. It can be done now in automation where we can actually scrape the data using a series of bots to actually do the compliance reporting. So there's a number of places that we can actually assist in kind of making sure that the data is clean and that we continue on to make sure that the source data is used.
All right. Anil, in the Indian context, any points to add for banks trying to maintain the highest quality of data to ensure success for their automation operating model?
I think, it's really about when you talk of data, you're talking about both structured and unstructured, like, Scott was mentioning, and he's already shared a lot of what I was going to say. I think from our standpoint, you must have the ability to have software tools, which we have, again, any type of tools that we've invented to make sure that we are not duplicating, right? Which obviously becomes a pain, when you have data getting duplicated. So having a single source of truth is always very, very welcome. And so, they say whatever is repeatable, whatever is manual, whatever is easy, just hand it off. You basically kind of assign bots to make that repetitive work, and that becomes error-free straight away. On the other side, again, you have to look at deploying technologies, right, which kind of give you a sense of what data is meaningful and what is not. At the end of the day, there's so much of data collection that happens. How do you make sense of that data as well, right? So making sure that what you're dealing with is heavily structured, unstructured, validated data. And there again, I think automation is playing a big role, where customers are talking about making sure that there is defense-like security for the data that they have. They've got data warehouses, so there is a place that they secure this data, and then making sure that they get rid of what's not required, as I think Shripad mentioned, right? So that's something that we are seeing across, but automation is front and center in most cases. Like I said, just keep it simple.
All right. Single source of truth. That's something you said, and that's something Subrat also mentioned. So Subrat, how does Axis ensure that data is of the highest quality to better anticipate customer needs, cross-sell and retain them?
So Gautam, one of the Hindi words for God is data. And, people say data is the new oil. I say data is the new data. So that's the way we look at it. Integrity of data is one thing which we spoke about. Bots don't get tired, they don't have attitude. So, the data flows through the way it should flow through. The second thing is, one of the things we are doing at Axis Bank is data architecture 3.0. Essentially, what it means is, the things are shifting from creating very complex models, which take a lot of time to build, and then rolling it out on the field, and then getting, after 2 months, the feedback about how that model went, to actually, focusing on data engineering, to be able to create models on the fly, and then be able to understand, how the models are working without actually having to spend a lot of time on modeling the models, right? It's more about actually deploying the models at rapid speed, getting feedback and then starting to work on that really, really fast. And that's very important for us. So data engineering is a very, very important component as we think of this. The second is data fluidity. The ability of your own internal, data moving across silos in your organization so that there is consistency across the board and also usage of data across the board. And that's again very, very important. Data often is not fluid within organizations. You can ingest it, you can have it absolutely, at the highest standard of integrity. But how do you make sure that data is fluid within the organization? That's part two. And part three is you should have alternative sources of data. I mean, banks do contain large amounts of data, but then there are all other ecosystem partners that you have, who also are transacting with you or are your partners, and they have alternative sources of data. So again, why is it important? And it's important because as you get that, you again reduce customer load, you again reduce customer friction by not asking for something which you can possibly deduce yourself. So I think those three again are additional points that I would like to add. And I'd like to again say, data is the naya data of any bank.
Data is the new god. I guess that's a marketing term somebody could use. But looking at the discussion and how it's shaped up, it's interesting to see roles being transposed within sectors and outside sectors. So I guess we'll come to a summary viewpoint from all of you on the fact that, technology giants are entering financial services as the next adjacency to their core business models. But on the flip side, are we seeing reverse with banks in a sense that they are transforming to technology companies? Let's understand from all of you if that's the case. Subrat, we'll start with you. What's your view on this? Do you think banks, in a sense, are becoming technology companies just as technology companies are trying to enter the banking space?
Gautam, every day someone tells me that they will have me for breakfast, lunch, dinner, depending on their appetite. So, I hear this every day. See, as a bank, where do we operate? We operate in the intersection of this large trend of consumerization of finance. Second, on technology. And third, on regulation. This is our sweet spot. We give equal importance to all three of them: consumerization, technology, and regulation. Whoever comes in, they might come in with one strength. They might be very good at consumerization. They might be really good at technology. But listen, when you have to deal with customers, money, when you have to deal with deposits, when you have to manage that with prudence, with long-term, matching of assets and liabilities, you will have to contend with regulations. And we believe by working in the sweet spot and innovating within that sweet spot, we will continue to be different and ahead. Whoever comes will have to contend with regulation, and that regulation does place enormous responsibility as well as at times constraints to make sure that in the long run the customer is protected. So for me, everyone is welcome. So long as eventually all of us will have to play in that sweet spot, it'll be a fun game.
There's a silent confidence in the way you say it, but let's get in other viewpoints on this as well. Anil, what's your thought? Do you think automation is helping banking companies transform to technology companies?
It's a given, Gautam. I don't think, just go back 10 years and see where we were, and you pose a question. If you kind of pose this question in let's say 2010 and look at the future, we would have said the same thing, that technology is here to stay. It is a huge business enabler. I don't think we can live without technology. Here is a reason why: because I think we forget the large digital workforce, the demographic, at least in India, is everybody is a digital citizen today. I don't think there's anything differentiating, especially in COVID, between what a physical citizen was and a digital citizen. We are conducting our lives digitally, right? We are the same. So in my view, looking at technology, and specifically, I say there are three irreversible trends that happened, right? Which was globalization, digitization, and mobility. We are never going to go back in time. The fourth one, irreversible trend, is automation. We cannot get out of automation any which ways as we look forward. So I think for people, and I don't think this is about banks or technologists like us, it is really about customer experiences. They will decide where they want to bank, how they want to bank. They will decide what's really the business that they want to conduct and how they want to conduct. So it's really going to be a reverse engineering from that point onwards. I think we will be the customers will dictate to us how they want to deal with us, how they want to transact with us. So in my view, technology in banking or technology in any other industry is embedded today. I think it is completely integrated. I can't see the two as exclusive.
Symbiotic rather than exclusive. Shripad, your
Yeah.
viewpoint on this, what do you think? Do you think banks are transforming to technology companies?
Yes, because basically human being is a continuous learning process. Okay, so when you do some things with a different, and when you take a sense of technology, how you get speed, how you get value, how you get volume, all these things will push banks to get more digi workforce in their places. Number one. Number two, what Mr. Subrat has added on this is one more thing is a trust. And in India, for all financial transaction, trust plays a big role. And with the regulator which is there in the all the bank side, I think it will be beneficiary for the bank to become more technology oriented, having some internal forces, because when you work with the vendor, there is a thin line between how you process the data, whether my data will be used, and you are the depository of a data. You're not supposed to give your data outside. So it makes a lot of sense to work on technology internally. So definitely it is not 100% technology company, but there are some basic things which definitely banks will develop, especially on the side of AI, ML, or data engines, or how to create the core on this, how you give a better experience. I think definitely banks are transforming towards getting more digital workforces or more engineers recruitment. Even the Scott which talks about Bank of America, if you really look at the number of the dealers which they are recruited versus the number of engineers which they have recruited, was much more in that case, and that is way back 10 years back. So I think the same trend will continue in India as well.
All right, let's see what Scott has to say. Scott, you've heard Shripad and Subrat talk about the Kotak Mahindra and Axis experiences. Judging by all the data points that we collated from this conversation, do you think that banks, in a sense, are transforming to technology companies?
I think they have to. And you start to think about what's happening in industry right now. If you look about mobility and e-commerce, the banks are touching that. If you look at the telco space, the telcos are touching that. So we start to see this whole evolution about digital banking, and it continues to go on. It's because the customers want it. A lot of the millennials want to bank, on a mobile device. So you'll continually see this whole theory or this discussion come back to what are the customers' wants, what do they need, and what's their journey. And so you'll start to see, e-commerce and telco and banks kind of starting to come together. But the banks will be the cornerstone. They'll be in the center of it because of the regulation and the trust that's required for people to actually transact with the bank. So I do think that this will continue to evolve. Technology will continue to fold into it, and you'll start to see, new use cases, new businesses evolve out of this probably over the next few years, and it'll be very exciting to watch the space grow. So I think that this is super exciting.
A brave new automated world. Let's see where that leads us. But on that note, it's time to wrap up the conversation around how banks in India have navigated massive change in their operating environment using the power of technology and automation. I guess if repetition makes reputation and reputation makes customers, consistency in delivering top-notch experiences for both customers and employees using the power of automation could be key to surviving and thriving in these change-driven times. I'd like to thank all the panelists, though, for joining us on this special presentation titled Forbes India Influencers of Change in partnership with UiPath, and sharing with us their insights on the topic. And of course, a big thank you to all of our viewers for tuning in. This is Gautam Srinivasan signing off.
Forbes India Influencers of Change in partnership with UiPath.